Well, we're back to the DAX this morning. And a warm welcome to one and all. And for those of you not seen me before, my name is Langers. I am the very knackered scruffy trader. And I shouldn't be, because it's my first day back from a little bit of a break. If you want to see what I got up to, there is a couple of videos of me arsing about in the middle of nowhere. And why not? Got to enjoy your life, guys. Got to enjoy your life. We've also got to pay for your life. And that's what this series is about. And it's really just grabbing a minimum of 10 pips before you go to work. And the idea of this is one trade, one wage. So I'm looking at one market, one setup, and then trying to, as I say, get about 10 pips out of it each morning. Now, it's coming into play pretty much now, believe it or not. This is an hourly chart of the DAX, and it's this leg here that I'm interested in. It looks pretty darn good, and it is showing signs of some form of retracement, which is good because it could move from there to the top of this, which marries into the cluster of that. So if I drop this to a 5-minute chart, you can see there it is there, starting to thump. Happy days. So yeah, I think it's pretty much okay for about 10 pips. So what we're going to do is we're going to start looking to get in, and we are currently, let's have a look. So the last one was 59, so we're up to 62 p a position. So if I just adjust that, we'll see how good this is to go. Now, price level wise, I want the price to come to me. We're looking at roughly 10 pips. So what we'll do is that ready to pop? Is we're just going to drop an order in. Just above it. Right. So what I'm doing is, because that's been quite an aggressive drop down over, I want to see if the price will recede and pick this up while I go make coffee. And why is that? Well, I like the price to come to me, and at the moment the spreads are quite wide, so I've got to be a little bit careful with the spreads as well. But if it picks up sort of in and around this leg, I'll be happy. Now, as we know, price doesn't always surge for you when you enter the market. Sometimes you've got to sort of sit on a bit of heat. So the idea is it'll push back and then come forward, sort of, okay, and then down into this level here. Now I'll adjust the target as and when. At the moment it's kind of set at 16 pips, which is fine. I'm quite happy to grab 16 pips if we can get that. Superb. If the price runs away from me, it doesn't matter. I'll just wait till I can get into a better price. But at the moment, I'm kind of wanting it to push back up and then come down on itself. Okay, so I'm going to toddle off and make a coffee. I'm quite happy with the price that's in, and I'll just leave it there, and I'll adjust it if I need to after 7. Okay.
And that was that, guys. Job done. Simple process. Pick the direction, have a reasonable idea where to get in, and then just set a relatively simple target. So what did it do for us? 1941, or 62p rather. Live with that. You know, it's quite a decent markup. So let's have a quick look. So had a little break. Started at 5.494. We're still on pretty aggressive risk. Now the thing with risk is, just bear with me. I'll just drop that in. 1941. I look at them completely separate. I know where my pain thresholds are, and that is just, I've had enough, I'm wrong. If I'm doing tight stops, as that trade has just shown, didn't go that far against me, but if it was tight stops, it would have just knocked me out the equation and I'd have lost money. But if you're sensible with your stops, and I do mean sensible, there's nothing wrong with a wide stop as long as it's a managed wide stop. If you just go willy-nilly into it and just go, bollocks to it, I'm not going to have any stop at all and see what happens, it's kind of a road to disaster. But you look at the upper point where you think the market will stretch to, and that's where you place your stop, out of the way. Because as we can see, I'll fill that in a bit later, but we're doing quite well on this. Before I just show you that chart, 13% up on our initial balance. We are 6.8 into this little target that I put in, and we haven't missed a beat yet, using a simple system, and it is a real simple system. And it works very well on the early morning volatility, or it seems to, because I've been testing it for months. But now we're about to find out, and we have an average pip of 23. That ain't bad, considering you only need 10. All right. So as I was saying about stretching up, we came in kind of around this area here, or wherever it was. Where did we get in at? 160.54. So that was here, sorry. It was around this area. Okay, so if I go 54 was the opening. So what was there? Okay. Squeezed up, not that far, and then shot down. And it shot down straight into target.
So if you look, if you are talking risk rewards, that is not greater than this. All right. Now, sometimes you are going to be inverse. It's the nature of the game. But the kind of the way that I look at it is I look for a single setup. And that single setup, if you bear with me just a tick, and I'll talk you through. I look for a single setup, and it'll be from sort of here to here or vice versa. That is the move that I'm looking for. Now within that move there is going to be waves, all right, just nature of the market. I'm looking to catch those waves as I'm working, but then I also look at the extreme on the other side of that bounded area, and that could be that, and that's where the stops are, and I'll manage into it. Now the Scruffy Squad know exactly what I'm talking about when I'm saying I'm managing into it, because I'll have an entry point, I'll have a maximum exit point, and I'll have management points all the way up to that exit point. And what that does is it actually reduces risk rather than increase it, and it reduces it quite considerably. And it's a hard concept to get your head around, because you are literally going backwards to go forward. And my trading is the same. I will trade down into the entry and I'll trade the other way to the exit. It's kind of a strange way of thinking, but I do this for a job. I don't do it because I've seen somebody that looks flash with a car and repackage something. It's just not my nature. What I show you is what I do for a living, and it's as simple as that, guys. I prove it all the time. I show statements, which very rarely others do, and ultimately I do it because I love it. I enjoy the process of making a video for you guys, and that's why I do it. If you come to the squad, brilliant. If you don't, it don't matter, because my wages will be the same. So that is today. We'll do it all again tomorrow, because like I say, I'm going to run this for about 50 trades if you've been watching the videos, and we'll see how it fares up at the end of that. And then it's a good forward test, because that's the other thing. Back testing gives you an idea of what you're trying to achieve. In other words, is it robust enough to put into practice? But forward testing, like what we're doing now, proves that it works, because when you back test, it's always perfect conditions. It's very difficult to forward test. Anyway, I'm going to go grab another coffee and better do my day job and put some pennies in the bank so I can have another trip. So as always, guys, trade well, keep your risk managed, and above all, do what you love, and the money will follow. See you all in the next one.